What are the risks of a CIS mortgage? It's actually really difficult to think of the actual downsides of a mortgage from your CIS income because there's so many upsides. But here's three that I did come up with. So when I thought about making this video, I didn't realize how difficult it was to actually come up with even three downsides to using your CIS income to get a mortgage. And that's because there are so many upsides. I'm always harping on about the positives, so I've occasionally got to be fair and think of some downsides. So here you go. Number one, overborrowing. Yep, that's right. You can actually borrow way too much using your CIS income. Let me explain. Let's imagine you've got a nice steady income as a chippy. Then you land this 3-month project. It's price work, and you know that price work actually brings in the big money. And at the end of this job, you then take your CIS payslips, and they're the ones that you're going to use to get a mortgage. But instead of buying the modest 2-bed cute little starter home, the income earned on your CIS payslips suggests that you can now afford to buy a 3-bed detached with a bigger driveway and a garage. Well, on the surface of it, you think that's great, but now you've got a monthly mortgage payment that's 30% bigger than you initially planned to pay. And then what happens when your project comes to an end? You're going to find yourself in a really stressful situation that you're either going to struggle month to month to make the payments, or worse, your home will be taken away from you if you don't pay the mortgage. So you've got to be really careful not to get over carried away with your mortgage. Just because you can borrow that much, you've got to ask yourself, should I really do this? And a good mortgage broker should be asking you the question, is this current income typical for you? Because if the answer is no, then you shouldn't stretch yourself that far. The next downside of using CIS income to get a mortgage, well, that's trying to get a CIS mortgage after Christmas or a long holiday. So it's not really a problem if you go to a mortgage broker that understands the situation and places you with a mortgage lender that considers the last 12 months payslips. Because this will factor what you have earned for the entire year rather than calculating a 3-month average using only 10 weeks of work out of the last 12. So this next video coming up is my complete guide to CIS mortgages and takes a much deeper dive into all things CIS mortgages. And you will benefit a lot from watching this one too. See you soon.